the conversation for today afternoon is Akshay Bhagwat, Senior Vice President, Derivatives Research at JM Financial Services. Akshay, good afternoon. Let's start off with Spark, just the move that we've seen on the counter. Now, I know that maybe we can't put in trades today, but how's the chart looking, and what should one expect going forward? Should one be cautious? Should one at some point buy into this kind of rally that we've seen on the stock?
Yeah, first of all, good afternoon.
Good afternoon.
Yes, the stock has rocketed almost on circuit today, and the volumes have been, tremendous in today's intraday trades. If you look at the last 3 months, it was sideways around 140, and today the blasting move has happened on back of news. So in all probabilities, technical charts are suggesting a additional medium-term target till 200. A support of 140 has been cemented with today's positive move. So one can continue to hold with a positive view with targets of 200 based on technical charts.
And Akshay, what do you make of the Nifty move today? 0.5% lower, with some of the large cap names showing some real signs of weakness. There can be reasons for that, but there's weakness nonetheless. What are charts suggesting on the Nifty?
So yes, ahead of key events, that's your bank policy and the Fed event, I think there is some bit of profit booking, which is evident in the derivative space. There has been rejection time and again to the levels of 26,300, which has proven to be a strong barrier, at least from the short-term perspective. So yes, 26,000 is the immediate support, but as we see that ahead of key events, the momentum is slowly fading off. Technical broader structure is still positive, but from a short-term trading or a weekly perspective, the range which is coming out now is the support of 25,900 and the resistance of 26,300, and a neutral setup is emerging in the Nifty index.
Okay. And Akshay, what are your picks for this afternoon? Therefore, what should one play?
Well, see, overall, it's a mixed market, so it's stock picking is a bit difficult in the current market scenario. But if you go with the momentum, then Asian Paints is one stock which has picked up strong momentum in the last half an hour to 1 hour of trade. If you look at the last 8 days, it's been in a tight range. The breakout comes as a breakout of a consolidation range. So 2,900 is the point of breakout. You keep a stop loss of 2,875 on your buying positions and look forward to targets of 3,000 to 3,050. So Asian Paints is the first buy call, and Eternal is the second stock you can look forward to. It's more of an anticipation that the stock is bottoming out at the levels of 295, and momentum may catch up soon. I'm assuming it's in an accumulation stage and looking forward to targets of 325. You can maintain a stop loss of 292 on this buy trade.
So those are a couple of calls for this afternoon. Akshay, I'm going to keep you on hold. We're going to go across to Kanishka. The couple of block deals that have happened. Bajaj Housing Finance, it slipped to a 52-week low. 22 crore shares, 2.5% stake changing hands. Kanishka, talk to us about that one as well as on Bank of Maharashtra.
First up, let's, like you said, Bajaj Housing Finance, a massive block deal over there. 22 crore shares have changed hands, or about 2.6% of equity. That's across 27 block deals. Now the stock did react very sharply. In fact, it fell more than 9% at one point, reaching its 52-week low. That's also hitting the record intraday low, of course. And it was, in fact, among the worst performance on both the Nifty 500 and BSE 500 after it fell initially after the block deal. Now the buyers and sellers, of course, have not been disclosed yet, but Bajaj Finance, that was the likely seller given its mandated state reduction. Now the floor price is what we were given to understand that it was set at 95 rupees per share. That's a lot lower than where the stock closed yesterday, and hence the downtake is what we are observing in the stock probably today. Now remember, currently Bajaj Finance holds about 88.7% stake in Bajaj Housing Finance and must bring that down to 75% by 2029. That's as per the regulatory requirements, and hence it is likely the seller today as far as Bajaj Housing Finance is concerned. Other than that, many other block deals. First up, there's Axis Bank, where 11 lakh shares have been traded in a block. HDFC Bank, 12 lakh shares over there that have changed hands. And lastly, there is Shriram Finance, 11.2 lakh shares have changed hands over there. as well. Of course, the buyers and sellers are not known yet, but we'll find out the official data once the market closes today, and we'll update you with the details then. And here's a quick update on Bank of Maharashtra OFS as well. The government 6% stake sale via OFS, that's seeing strong interest, and on the first day, as of 1:55 p.m. on about 2 p.m. over there, 1.05 times is what the OFS has been subscribed. So yes, lots of action as far as block deals are concerned today.
Okay, Kanishka, thank you so much. We'll let you go on that note. Narendra Solanki also joining us, Head Fundamental Research and Investment Services at Anand Rathi Shares. Narendra, welcome. Good afternoon. Let me start with you. Bajaj Housing, the IPO price was 70 rupees a piece, went all the way up to over 180 rupees a piece, has come back off to 97. Buying opportunity, would you reckon this is one such opportunity?
Yeah, good afternoon. Yeah, definitely. The stock has seen a lot of correction lately, and currently it's trading almost very near to its IPO price. Right now, as far as taking a position on the stock is concerned, we do not have any active recommendations in the stock. But yeah, from a sector perspective, we do like the housing finance sectors. And in this sector, I think Aptus Value Housing Finance is the stock where we would like to go for medium to long term.
Thesis there, Narendra? Aptus Value?
Excuse me. Yeah, Aptus Value Housing. See, if you see overall in terms of ROAs, it has a very robust ROA of around 7%. And the domain expertise the company offers is also one of the best in class. And the AUM growth is also quite decent, upwards of 20% or so. So we prefer Aptus in comparison with Bajaj Housing.
Right. Akshay, do you have a view with regard to a Bajaj Housing? I know that the charts may be limited for you, maybe 15 months, but I'm trying to get a perspective as to whether one should maybe play a trade because 7% lower on the counter because of blocks. Can you take advantage of that on maybe a BTST kind of a trade?
See, actually, technical charts are negative because the gap up has come down from a breach of an important support of 105. So yes, because of block trades and considering that we opened 7-8% lower, the stock is trying to make an intraday rebound. But I would suggest not to take a BTST, go a bit slow on this, considering that a 52-week low, or rather the all-time lows are trading in this stock, and would wait for some more clarity before taking a buy trade on this.
Okay, await clarity. So neither on the fundamental side do we have a clear view coming in from Narendra. On the technical side, stay away is what Akshay seems to be suggesting. But what we'll do is we'll need to slip into a very short break. But before I do that, let me remind you, the beginning of the month often marks key financial activities, salary credits, bill payments and planning expenses. But just as we plan for our expenses, it's equally important to plan for our investments. To encourage this habit, SBI Mutual Fund, in collaboration with the Times Network, is launching a nationwide investor awareness initiative, Bharat Nivesh, Behtar Nivesh, Behtar Kal. The objective of this initiative is to promote the habit of consistent investing among Indians, helping them secure their financial future. As part of the campaign, we are observing 4th of every month as a monthly reminder to ensure that you start your mutual fund SIP to ensure your existing SIP continues. So go on and set your reminder to invest consistently and stay committed to your goals for the financial well-being of you and your loved ones.
With us. Akshay, just wanted to get your sense in on some of the private banking names, namely ICICI Bank and HDFC Bank, vis-a-vis what's happening in the PSU banking pack ever since the government announced offloading a stake in Bank of Baroda. You are seeing some amount of buoyancy, at least with the entire PSB pack. So tell me, what exactly are you seeing right now, PSBs versus the private banking names?
In light of the RBI event, which is due on 4th and 5th, I think there is some profit taking, which is evident in most of the banking names. PSU banks somewhere are holding on, but if you look at the private banking space, clearly there is some bit of liquidation pressure in the futures and options. And also there is one more circular where the SEBI has stated that the weightage of the banking stocks, the heavyweights would come down eventually in a phased manner by March. The names like HDFC, ICICI, Axis Bank are heavyweights, having significant weightage in the bank index. And with this new rule which comes in place, where staggered with the weightage would come down, I think there may be some short-term pressure felt on these banking names, especially the private banking space.
Right. In fact, take a look at some of those PSBs. Bank of Maharashtra, of course, ever since the announcement came by, that stock, of course, has been buoyant. But other than that, while it's holding up 0.5%, SBI as well began the trading session today with some amount of green, though that's fizzled out completely in trade. But it's the smaller PSBs. They are the ones which continue to hold higher. And let's check in on some of those names. Look at a Union Bank, for instance, a Canara Bank. That's where you're seeing the meaty moves actually come in anticipation of perhaps further disinvestment by the government. But that said, the eye-catcher move today is in Asian Paints, 29.57, a solid 3% of an uptick on the stock.
Well, yes, and the last half hour or so is where we've seen another bit of a spike. Akshay, your view with regard to Asian Paints and the kind of move we're seeing today?
So Asian Paints, it's more of a momentum short-term pickup. I think if you look at the broad charts, it's a bit overbought for comfort. So this momentum might be for today, or you can at the most take it as a BTST or a very short term. Right now, you can go with targets till 3,000, not beyond that, because overall the stock has had a tremendous one-way run from 2,300. It's just that today the momentum has caught up with a range break of a consolidation. So I would say take it more as a BTST trade. If you're holding it, then 3,000 is where you should be looking to take profits in this counter.
Naren, curious to know what's the strategy for banks right now, and would any of the smaller PSBs in anticipation of disinvestment by the government entice you?
Yeah, definitely. In comparison with the private banks, we prefer public sector banks right now. And also, this weekend we have RBI policy scheduled. So consensus broadly is that we may see some kind of a small rate cut as well. So in that scenario, plus and overall, if you look from both the valuation perspective, I think there is still scope for public sector banks to run up from here onwards. And coming to the smaller names in PSBs, definitely Union Bank of India is one of our top picks. Indian Bank is another name. So these two banks are the smaller PSB banks which we prefer, along with the larger ones like SBI.
Okay, all right. You know what we'll do? We'll slip into a very short break. On the other side, there's plenty to speak about, especially on charts. Some of these heavyweights, HDFC, Reliance, have been big movers today and have influenced the way Nifty has moved as well. We'll get into a reasoning as to why that is so, and we'll take a chart check. Stay with us here on ET. Welcome back, and we're coming live to you from the SBI Live studio. And to a Trent, your view?
Yeah, we do not have any active recommendation on the stock, but yeah, definitely this year the company has faltered in terms of revenue growth, and aggressive store additions actually didn't aided in revenue growth. So that has been seen in the performance of the price, as well as in terms of valuations. The aggressive earnings growth, which were priced in the valuations, actually also didn't hold up, and we have seen the correction. So I think we are still, I think, few quarters away in terms of performance to improve, and overall performance to improve while the competition is very intense. In this space, we are much more keener into the names which are operating into tier 2, 3, and tier 4 kind of a cities. Names like Vishal Mega Mart, wherein we have been seeing that the rural markets are the area where the real where the growth is very strong right now, and the consumption also is very strong in comparison with the urban markets or tier 1 or tier 2 markets. So we prefer Vishal Mega Mart in comparison with the trends.
Right. Well, in case you're wondering why the pressure
Welcome back, and we're coming live to you from the SBI Live studio, and you're watching Closing Trades here on ET Now. Let's quickly talk about a couple of other stocks with Narendra, but let me also bring in Shivangi Sarda, analyst, equity, derivatives and technicals, broking and distribution at Motilal Oswal Financial Services. Let me though take a quick view from Narendra. Narendra, with regard to the private sector banks and the rejig within the Nifty bank, which we were talking about prior to the break, give us your take with regard to what it will mean over the next maybe 2 months or so as this rejig happens. Opportunities to buy, you believe, in some of these counters as the rejig happens? Of course, today itself we are seeing around 1.5% lower on HDFC Bank, which is material for the kind of stock that it is.
Yeah, definitely. Banking as a space is definitely a long-term story, and private banks also, although they have not performed in a year or so, but definitely there's not much downside from these levels. Although the recovery could take some time, so you can definitely with these rejigs, if there are any opportunities which are coming your way, so definitely one can chip in a few shares of private sector banks and build their portfolios for medium to long term. The stocks like Axis Bank, we are very positive in terms in private sector space, followed by ICICI banks. In both these two stocks, we prefer in private sector banks right now. So if any opportunity arises because of these flows, then definitely one can chip in for their long-term investment needs.
Well, almost on the brink of breaching the 26,000 mark. Shivangi, hi, afternoon. How critical would be this level, given that, we took a long time to actually cruise past that, and then it became the base when we did perk up to that all-time high. And if indeed we do breach 26,000, what's the significance of it, and what kind of downside then would it open on the index?
Very good afternoon, Aisha and Harsh. Thank you for having me. So we've seen that, of course, there was a psychological barrier at 26,000, which later then became a good base. And now the index is getting ready to, breach these levels. But again, there has been a good amount of psychological support-based buying here, which has bounced back the index with just a few, points. So these minor points will be very important to watch out for. And if it breaks 26,000, then we could see some more weakness towards 25,850, which is the next support that we're looking at. But overall, we're expecting this to hold, to consolidate for a bit. We've seen a good rally in the last few sessions, and profit taking at the higher levels is healthy. But of course, we are holding on to the immediate support levels, which is also quite positive. So we are expecting some bit of consolidation at these levels, and these levels would be important to watch and track. But of course, the upside still remains a little capped at 26,200 marks.
Is this purely an expiry day move, Shivangi? Is that how you would attribute the kind of move we've seen?
Absolutely, Harsh. Expiry we've seen has now become quite volatile and quite interesting also. From the initial tick today, we saw that there was some bit of giving up by the index. After we opened gap down, we kind of made a little bit of attempt towards 26,150, but we failed to hold at those levels, and we've seen volatile moves thereafter. Swings were there within a very stipulated range, but then again, we've seen that the overall trend, even though the short-term trend had likely become negative, the overall trend still remains intact and for the positive. So expiry day volatility, yes, it's there, but we are expecting some bit of consolidation for the next week, which is coming ahead.
1% lower on the Nifty India Defense Index. And Narendra, you were talking about how defense is something you're liking as a structural story. What would you nibble into if at all one were to start to see a bit of correction? And we are starting to see that. So what would you nibble into?
I think we have Bharat Electronics Limited as our top pick, which we like very much. And overall, in terms of defense space, we prefer ancillary plays like Bharat Electronics, Bharat Dynamics, Solar Industries is another play. So we prefer ancillary plays and the companies who are supplying to the platform plays. So platform players like HAL, Hindustan Aeronautics. So all these ancillary companies are supplying different products and parts to either the end users or the platform players. So the stocks like Bharat Electronics, Bharat Dynamics, Solar Industries could be looked at, and they are looking good for medium to long term perspective.
Narendra, would it be a one-shot buy? Would that be the approach when you're addressing some of these counters, or would you stagger buy? So just trying to get your comfort with regard to valuations. See, I mean, if you're going in one shot, that means you're very, very comfortable even now where valuations is concerned, right? So trying to get a sense as to how you look at it.
Yeah, so from a perspective of 3 years or longer, I think even one can do a one-shot buy because the headroom, the growth headroom is very, very huge in terms of defense orders. And we have just started, and we could be seeing a lot of new orders also coming up in the pipeline. There are a lot of orders there for the defense space. So if you have a horizon of 3 years plus, then definitely in one shot also you can enter into it. And if you have a lower horizon, then I think a staggered buying should be done.
Okay, Naren, thanks so much for your time today. Good to be speaking with you. Shivangi, just want to come back to you. Any trading ideas as we begin to lose steam on the back to closing trades right here on 18 hours, still on the brink of that 26,000 mark. 26,021 is where we're currently at. ICICI Bank, HDFC Bank under pressure, a small pocket of PSB banks. They're the ones which are actually holding out because of the Nifty Bank rejig, which got announced. And other than that, few select names like an Asian Paints, Motherson Sumi, KEI, Power India, they continue to hold out, but lots of pressure. And especially if you talk about the Nifty and the large caps, there's Axis, Reliance Industries. Interglobe Aviation, in fact, has been on the easing end for the past many trading sessions. Today as well, it's lost about almost 1.6%. And that's the case with an L&T, with an ITC, and a select other names as well. Look out for SBI because that's completely reversed trend. It started off in the green, remember, was holding up around 1% or so. It's completely lost all of its mojo. It's currently lower by 0.6% as we speak right now. But Mayuresh Joshi too on the show to talk about what he's liking in this market. And Mayuresh, hi, afternoon. Was just discussing this entire debate about private banks as well as PSBs. And other than, of course, the government's announcement of disinvestment in Bank of Maharashtra, today it seems it's the Nifty Bank as well, the rejig that got announced, which also seems to be a factor at play. Having said that, from an investment perspective, where's your tilt?
Afternoon, Aisha. So I think it's a mix and blend of both. So within the large private names, ICICI Bank is something that we still continue holding on in our local and global portfolios. Within PSUs, State Bank of India and Bank of Maharashtra is something that we continue holding as well. And therefore, I think our thesis is pretty simple. I think the banks which have the least CASA deterioration largely in the quarter gone by, will probably see incremental benefits as we head into the next few quarters. At the same time, the advanced deposit mix is going to be extremely critical, as well as keeping an eye in terms of the unsecured lending book. If that expands at a faster clip, the expectations in terms of your SMA1, SMA2 book actually going down and slippage is probably going on the higher side, might increase the risk as far as a few banks are concerned. Obviously, I think as we head into the next few quarters, the expectations of demand coming back strongly is expected to continue in terms of better advanced growth. Provisioning still remains relatively stronger on most bank balance sheets. And therefore, I think within the sector itself, I think a few of these banks, in our opinion, looking at rating, ranking, institution holding, the cancellation parameters that we follow, might do well. So being a little selective, but our take is that selectively banks will perform well as we head into the next few quarters.
Okay, banks will perform well. I wonder, Shivangi, if you have a view with regard to an HDFC and ICICI Bank, the kind of moves we've seen today, give us a sense whether one can play a trade, a BTST maybe for any of these for tomorrow.
Banking names have actually, done quite well in this entire rally. But the major focus has been on the PSU names. Of course, when we talk about majors like HDFC Bank, this stock has witnessed quite a lot of volatile swings in the last 13 odd trading sessions with swings on either sides. Relatively, if we look at the stock, this has been, quite different. Right now, we've seen that, the previous hurdle zones of 1020 has not been able to surpass. So overall, there is some bit of call writing which is still present here, and I would recommend a little wait on watch for the trading perspective for these names. And we have better stocks in the same space which are holding, well at the higher levels, which one could focus on.
Well, okay. All right. The other one in focus, in fact, is HCC. It zoomed in trade on the...
Quite a bit of orders. Mayuresh, wondering what's the view here? Infra as a space and whether it's still investable and opportunity?
Seems to be the case, Aisha, selectively. But you've seen what has probably happened with the road companies as an example. I think if you're looking at KNR, Pennar Industries, PNC Infratech as an example, I think they have got hammered down, trading around their book values as we speak. And it's clearly a case where margins have probably deteriorated. There is no dearth of orders that are expected to come through. Similarly, I think for players like an NCC, NBCC that you mentioned, including the likes of an HCC or even Patel Engineering as an example, as a basket within the entire space. The order book is pretty decent. The execution has been fair as well, and therefore I think margins have expanded. The only perspective that the street probably wants is whether this is going to compound at a good pace going forward as well. And therefore, I think we are being very, very selective in this space. I think a good way to play this entire infrastructure manufacturing theme, if you probably leave aside a few of the past stocks which you probably like, or as a theme, including EPC players, transmission players. I think cement players can be a good proxy to the whole argument. ACC, as an example, I think valuations extremely cheap. It's making a very good base as we speak at Markets Met India, the way we analyze charts. And therefore, I think from a volume perspective, expected to be reasonably stronger as we head into the next few quarters. The expectations in terms of urban infrastructure, along with expectations of rural infrastructure, both on the housing and infra part, expected to pick up, including the likes of railways, metros as an example. I think that should augur well for cement volume growth going forward. So our own take is that power as a space is something that we continue liking in the entire ecosystem as far as infrastructure manufacturing is concerned. But as a proxy, I think cement might actually do well over the next few quarters.
Mayuresh, what's the take with regard to an Asian Paints?
So after I think extremely strong set of numbers as were reported in Q2. Typically, I think from a paint industry volume growth perspective, it probably mirrors the nominal GDP growth. And therefore, expectations of a 10 to 12% volume growth is something that one can build in over the next few quarters in the next couple of years. From a market perspective, the market size itself is around 1 lakh or 1,25,000 crores. 30-40% is still largely unorganized, which means for the organized larger players, there is still sufficient amount of growth. And with GST rationalization taking place, prices have obviously become far more competitive to the unorganized players. The third element in terms of the entry of Birla Opus, I think that element is now probably coming. It is going to go off for the radar simply because Birla Opus will now start looking at balance sheet dynamics in terms of margin than profitability. And what this really does is for leadership stocks like an Asian Paint, as an example, where they've got an entire suite of products, right from emulsions to distempers. I think that augurs well. Last but not the least, I think from an input cost perspective, costs have moderated quite significantly. Outside their core cost, labor cost becomes the second largest component for paint companies, but that is largely unavoidable as we speak, but still remains relatively lower in terms of the overall cost structure that paint companies probably have to incur. And therefore, our own sense is that with numbers that Asian Paints have posted in Q2, Q3, Q4, with all the factors at play, might turn out to be relatively better. Repainting demand expected to come back strongly would also act as tailwind. So anybody holding Asian Paints should continue.
Right, okay, that's Asian Paints, the star performer today, almost notching a 3% gain now. Let's take a very quick break, continue tracking markets on the other side.
Welcome back, and you're watching Closing Trades. Mayuresh still with us. Mayuresh, with regard to some of the defense counters, again, you're starting to see a bit of pressure getting built up in that pocket, at least today in particular. Would you go out and buy any of these names at this point, or are valuations not at the best shape at this point for you to pick up defense names?
No, so Harsh, I think as a pack, if you probably look at shipbuilding companies, Abasgao, Cochin, I think valuations are obviously high as we speak. I think the large part that markets have as expectations is that over the next 5 to 6 years, they've got revenue visibility spread over that period. And therefore, from an order and a revenue perspective, I think there should not be any hassles. 1-2 quarters will always be lumpy as we speak. However, I think you probably need to be a little bit more selective as we head into the next month and a half, and as budget comes around. I think there is going to be a significant allocation that is expected to continue for the sector as a whole. And the emphasis in terms of Atmanirbharta or Atmanirbhar Bharat is absolutely going to continue. And therefore, I think as a space over a longer period of time, being an extremely capital intensive sector, I think the returns will be back-ended as we speak. Having said that, I think Solar Industries is one stock as a proxy to the entire defense space that we're probably holding in our local and global portfolios. Our sense is that the product mix that Solar probably has, the expectations that we are inferring over the next few quarters, revenue growth should be relatively better. Earnings growth, which we ultimately track, and cash flows, which we also track very, very closely, should be relatively stronger as well. They should be able to execute well as we head into the next few quarters. And therefore, I think return ratios should remain relatively stronger. It's not that Solar Industries is particularly cheap, but our own sense is that from the stability in terms of reported earnings and ratings and rankings that we see, it seems to be a far more plausible bet within the sector as we speak.
Right, okay. In fact, Shivangi, I wanted to run this past you on what you're foreseeing, and let's keep BEL out of this because BEL seems to be in a different trajectory of its own. But for the rest of the defense pack, what's the chart reading like? Because they seem to be easing off quite a fair bit. Shivangi, you'll have to unmute yourself.
Yeah, I'm unmuted. So we've seen, the defense pack actually kind of, move in a very volatile manner. In fact, BEL was one of the stocks which has, kind of outperformed in this entire space. So BEL continues to be strong, and it is a preferred long-term investment must-have portfolio stock. But apart from this, we've seen, the other stocks kind of lose a little momentum. Even the shipping stocks, if we move focus to these stocks, these have also kind of witnessed a lackluster move from the last 9 odd weeks. So we could wait and watch over here. Focus could be on the other sectors as of now, which might fetch some outperformance in this kind of market.
Okay, and what about a Swiggy, Shivangi?
So the QSR space stocks have done quite well in this entire year. We've seen, the other stocks also perform. But Swiggy, of course, we've seen some bit of consolidation in the last, round about 10 sessions and some weakness or profit taking in the last 6 weeks. But the good part is that it has taken support near 380 odd levels, and there would be some bit of capped upside as of now. But once this stock crosses 405 level, which is an important exponential moving average, then we could expect certain momentum towards 420 odd levels. So it would be important to watch out 405.
What about Eternal, Shivangi? Because that seems to have somewhat gotten sideways off late, just circling around that 300 rupee per share mark.
Yes, we have seen some bit of, lackluster move here, and the stock has actually given up most of its gains in the last 5 odd weeks. But on a year-on-year basis, it has outperformed from the last three consistent years, and we've seen a good amount of returns on a long-term basis, even though the stock has kind of rubbed off from its all-time high levels. Overall, on the immediate basis, if we talk about trading perspective, the stock is starting to gain momentum, but follow-up is slightly missing. If it holds above 300 levels, then we could expect round about 310 odd levels here. Again, upside remains slightly capped here because of the absence of follow-up buying.
Swiggy, Zomato, what about you, Mayuresh? Where do you sit?
So neutral as we speak, Harsh.
Okay.
Again, I think a large element in terms of both the lines of businesses that these quick commerce players do, both in terms of quick commerce as well as delivery business. I think the expectations now getting built in are that the kind of margins that they are expected to post are probably going to remain in that range. At the same time, I think with the dark store expansions that are probably happening, both for Swiggy, Eternal, the unlisted player, Zepto as well, and the impending competition that we've been hearing about, whether that comes from Amazon or Jio. I think what this really means is that pricing will no longer be a key here, and even expansion of margins. The only factor or the only variable that probably is in their favor is improved volumes as they head into different markets. But with entering into different markets also comes the risk in terms of the capex and how much of a payback will probably happen on those new centers and in what periodicity of time. Therefore, in my opinion, again, I think it's largely penciling in a large part of the variables. And therefore, I think both from a valuation perspective and an earnings perspective, it is probably priced to perfection. However, I think there are only a couple of players that we're getting in on this entire QCOM space as we speak. But again, largely a neutral EV because our understanding is that earnings might not be expanding as meaningfully and compounding as one really expects them to deliver.
Aisha, you know what? 0.5% lower on the index. We're seeing some bit of weakness. Pretty much all sectoral indices in the red except pharma and healthcare. That's the other piece which is playing out. But it's an expiry day move. You know, the silver lining is that it's an expiry day move. That's point number one. And it's not all that bad. While the breadth of the market is weak, but we've not slipped below the 26K mark. We've held the 26K mark and we're seeing some support there. So despite the expiry day move, we haven't slipped below 26K. That's possibly a couple of silver linings out of the trade today.
Oh, yeah, absolutely. And I can see some of the individual segments. I mean, look what's happening within the tire space, for instance. Everything from an MRF to an Apollo, that entire segment is holding out very smartly. Shivangi, any trading opportunities within tires?
Within tires, I think, yes, some of the auto space and auto ancillary stocks have done quite well. Now, if we look at specifically the tire space stocks, I think, MRF is one which has gained quite a lot of momentum of lately with good amount of short covering. But I think most stable name would be Apollo Tires. We've seen that this stock has held on above its key exponential moving average. And, after the softness of the last 5 sessions, we've seen a good negation, and even though follow-up is slightly missing, but the stock is a slow and steady uprise one. So one can look at Apollo Tires for the next roundabout of 540 odd levels with a support of 508.
Okay. Consumption, Mayuresh, what do you like within that basket?
So if you have to break it up between FMCG and other FMCG, I think within FMCG, Marico is something that we continue liking, both at a local and a global level. Our take is that though the market might not expand quite meaningfully, the unorganized market still remains large. With GST rationalization, again, I think the entire rationale is that it becomes competitive to the unorganized space. The third element, obviously, is that with the cut that probably happens, you will see an uptick in volumes. But again, margins might also start stabilizing and improving because I think all the other variables that probably move around creating volume impact for FMCG companies, with the cut itself, it creates a huge impact in terms of volume stroke value growth. And therefore, Marico within FMCG is something that we continue liking and holding on in terms of our local and global portfolios. Within the non-FMCG names, Vishal Megamart, is something that we continue liking. Again, a mix of apparels, FMCG, non-FMCG, placed in tier 3, tier 4 cities. Though the GST cut will not impact it quite meaningfully, but a small impact positively will come through for Vishal Megamart. The expectations of discretionary spending coming back for apparel, FMCG, and otherwise will probably mean and imply that the revenue spends per customer and per square feet will actually improve, which is a huge dynamic for players within the retail space. So Vishal Megamart is something that we continue liking within the non-FMCG.
And what about something like an IT, Mayuresh? Would that at all feature on your buy list?
No, we've been relatively on the sidelines for the sector as a whole. And if you probably have a check done between large and mid-cap IT, our thesis was that selective mid-cap will continue doing well over the past few quarters, and that has been the case. Obviously, from a valuation stack-up perspective, large cap is probably trading at reasonable valuations. But as we head into the third and the fourth quarter, obviously furloughs, Christmas holidays are going to impact revenue days in Q3. What happens in terms of discretionary spending trends is to look out and watch out for in Q4. And therefore, with the tariff impositions, what kind of an impact has happened across sectors and budgetary spends is something that we'll come to know in Q4 itself. Relatively, mid-cap IT commentaries were stronger, stable, and they pointed out to a reasonable amount of pricing growth as well. So I think if you probably stack this up and commentary seen within mid-cap IT, the thesis that gets built around is that pricing pressures might not persist, orders might still keep on coming through, which is a sweet spot in that $1 million to $10 million range. These orders will be coming at reasonable margins. And therefore, even if it is a tad bit more expensive, earnings might continue remaining relatively stronger. Coforge, Persistent, Emphasis is something that have delivered on all these parameters as we speak. And though, again, as I'm repeating myself, expensive, might continue doing well if they deliver on numbers.
Right. Okay. Mayuresh, thanks as always for your time. Good to be speaking with you. Shivangi, hang in there. Going to get back to you for a reaction after market close. And I'm going to